Hi, my name is Richard Hutton and welcome to the Exponential Fund, the place where you learn to invest and absolutely crush average market returns. Well, it seems like not so much lately, right? So I thought, let me just do a simple video, an update, how the portfolio is doing and the state of the market. It is no secret that high growth tech stocks have been absolutely crushed lately, but let's just see how much. So I started the portfolio on eToro in June of 2021, so June last year, just a bit over 6 months ago. Since then, the account is down 30%. Ouch. Well, I did warn people that in the short term it can be very volatile, and the time frame that you hold minimum should be 2-3 years. But from its peak, it's actually down 39%, the account, right? Because in the first month it went up a bit and then to the toilet. Just this month, January, and it's not even the end of the month, it's January 29th when I'm recording this. Just this month, the portfolio is down 20%. Sorry. The 20 stocks I own are down on average from their all-time high. Watch this. 63%. That's like .com crash level drawdowns. But the big difference is these are real companies. So from what I heard, in the .com crash were mostly bullshit stocks with no revenue, simply websites that had a lot of traffic. And it was like this insane mania. But now the companies that I invest in are quite large, have significant revenues, are growing very, very fast. But the macro situation is such that a lot of people sold these stocks. So it is what it is. The stock in my portfolio, which is least down, is only down 21%, Vertex. And actually, I have 28% profit on it. It's the only stock that is profitable right now. The stock which is down the most, it's Bilibili, a Chinese company. It's down 81%. That's fucking crazy, right? So just from looking at these numbers, like how much is down, I would guess we're close to the bottom. So if the stocks are down 63%, they would need to go back on average just to get to their all-time high previously. They would have to go up 170%. Right? That's insane. So obviously the question is, in what time frame? Well, I have no idea. But what I can say is these stocks are extremely cheap. Right? I mean, their valuation multiples have compressed so greatly. Some of these stocks have been going down for like a year, while they have been growing very, very fast. So their multiple actually compressed a lot. So it's almost as if they can't stay down too much because they'll become just so cheap, algorithms will automatically buy them. It is possible this year to see a recovery. We'll see. If we do, this could be a very good year. So just like we've seen double-digit down months, we can see double-digit up months, and yes, it is within the range of possibility that sometimes this portfolio could have a triple-digit up year. Not every year, obviously, but you know. And one more thing regarding eToro. eToro has a risk score calculator, and they have some rules, especially for people who are copied by others. It's like investing other people's money. There is a limit to how much risk I can take. Right, so how is this risk score calculated? Well, a few factors. How concentrated the portfolio is, so how much of the account I put in a single stock, if I use leverage and how much, and then simply volatility of the portfolio. So the problem is that eToro defines risk as volatility. And as I've said in the past, I do not agree with this definition. I firmly believe risk has nothing to do with volatility. I mean, think about startups. Tech startups very often go up every year, are marked up at each funding round because there's like pressure from venture capitalists to not mark down their investments. So the downward volatility is very small. It just, most of the time, it goes to zero. Right? Whereas in the public markets, where you can trade every day, stocks can be very volatile. And yet, a large, high-quality company that's growing fast can have a very high probability of succeeding in the long term. So that's how I define risk. What is the probability that the stock will be higher after a predetermined period? And that period should be long term, like 5 years at least. And with big, great companies, that probability is extremely high by my estimate. Like, could be like 90% plus. But in the meanwhile, it will probably be very volatile. Anyway, long story short, for people who are copied by others, we must maintain a risk score of 6. So from 0 to 10, maximum 6. Because of this sharp decline in stocks, my risk score currently is 7. And I have received an email from eToro saying, strike one, that's it. For 2 months, nobody new can copy you. Lower your risk score, or otherwise we'll block you again for 3 months. And if you keep up this high risk, we will take extra measures. Okay. So, I do not agree with their definition of risk. I do agree leverage is risky and concentration. Fair enough. It's just volatility. But for now, I will comply. So first, win at the game, and then change the rules of the game. What I did to reduce risk, is I simply sold a bit of stock to have 10% of the portfolio in cash. And this actually not only lowers volatility, but actually, it will improve the ratio between my average return and my max drawdown, right? It will reduce my average return, but it will reduce my max drawdown by more than that, right? Because let's say in a month from now, the stocks keep going down. Well, now my 10% cash position is bigger, represents a bigger percentage. It will be, I don't know, 12, 13, 14, 15% of the account. So what do? I would have to spend some of that cash to buy more stocks, which now are even lower. I would get them at a better price. And then when the stocks go up, now my cash position would be less than 10%. So I have to sell some stock, right? So I would do even more rebalancing. That's nice. I hope it's enough to have 10% in cash. If my risk score will remain high, I will maybe sell another 10%, 20% in cash. I don't know. The outlook of these stocks, it's still sufficiently positive that even a 10% or 20% like tax or like a break impediment over the long term, many years, the portfolio should still be up a lot. So that's it for today. Thank you for your patience and see you next time.